Hello everyone and welcome to today's webinar co-hosted by Demica and Coface titled New Challenges in Debtor and Obligor Risk Assessment. Before we get started, I would like to go over a few items so you know how to participate in today's event. You have joined the presentation in listen-only mode using your computer speaker system by default. We have an expert panel here today and we would really encourage you to submit text questions to today's presenters by typing your questions into the questions pane of the control panel. Please send in your questions at any time during the presentation. We will collect these and address them during a dedicated Q&A session at the end of the session. Today's webinar is being recorded and you will receive a follow-up email within 24 to 48 hours with a link to view the recording. I would now like to introduce Coface Managing Director for UK and Ireland, Frédéric Bourgeois, to begin our webinar.
Thank you very much, Daniel. Good morning, everyone, or good afternoon to you if you are in Asia, because we've got a number of registrations from Asia as well. We are delighted to have this discussion today, which will focus on credit risk and according to three different perspectives. The first one will be developed by Hans Meyer, who is the Director for Information, Claims and Collections for Coface in the UK and Ireland, and he will look at the way we analyze credit risk in a changing environment, changing not only because of the COVID crisis, but also changing because governments have changed some of the rules of the game, sometimes to the detriment of the ability to underwrite or analyze risk properly. We will then move on to François Terrade, who, on the back of a massive sample of companies which are which have got securitization programs run through Demica, François will be able to show you some of the underlying trends, both in terms of volumes, delinquencies and defaults across a selection of sectors. And finally, we'll look at credit risk across a different feature, which is fraud. And it is Andrew Sher. Andrew is the Commercial Director for Coface in the UK and Ireland, but above that is our Chief Operating Officer and in charge of any kind of fraud monitoring. Effectively is our money laundering reporting officer. So as Daniel introduced, we will have some questions at the end of the session. And with this, I would like to hand over to Hans Meyer. Hans, over to you.
Thank you, Frederic, and good morning, good afternoon. Nice to see some new names on the list of participants, but also very nice to see some of the old names that I recognize. So good morning and good afternoon. The purpose here for me is to look at the Corporate Insolvency and Governance Bill, which is one of the issues that has been implemented in the UK, but also to look at how that has impacted across the rest of the world and in Europe in particular. Dan, if I could see the first slide, please. So we looked at the Corporate Insolvency and the Governance Bill, which was introduced at the beginning of 2020. Really, the idea here was for the government to provide greater flexibility and more time to companies to assist with the coronavirus, and as a result, that some of the financial data here would be relaxed and all would be suspended. Some of the measures that were introduced, the moratorium, restructuring plans and the prohibition of terminations, wrongful trading, all of this has also had an impact on some of the businesses out there, but I'll tackle that later. For me, the main reason here is to look at what are the measures that have been implemented for looking at the data and the analysis that we within Coface obtain, upon which we do the risk underwriting. What we're seeing in the UK, like I mentioned, is seen around the globe. You can see at the bottom here that we've got a variety of measures that have been copied across most of Western Europe. State guarantee loans in all of the countries, furloughs in all of the countries, and then legal actions and suspensions, like I mentioned, wrongful trading liabilities also changed. So as mentioned, the main reason and the main topic for me here is to look at the financial data requirements. So if I can have the next slide, please. First of all, what we've noticed with the financial data, we've seen a massive growth in new businesses as a result of the coronavirus. We've seen that across many of the countries around the world, the US, the UK, France, et al. We've seen substantial increases in new company registrations. In the UK, more than 84,000 businesses have been set up in 2020, a 12% increase on the previous year. Most of those businesses are those that are unemployed, have restarted up their own businesses. These are SMEs. These are not creating additional employment. Those not needing to report numbers as a result. So a lot of businesses, but no data effectively available. There's also a question mark of how many of these businesses have been set up for the purpose to bring them out of a dormant status and then apply for the CBILS and the BBLs. CBILS is the coronavirus business interruption loans, and the BB is the business bounce back business loan schemes from the government. And again, we've seen these in other countries as well. Can I have the next slide, please, Dan? So with that comes, of course, a massive amount of lack of data. Biggest changes is that we've had in the UK is that the relaxation of meetings and filing requirements. We've also seen that most of the EU countries are on the same page regarding filing delays. Mostly have implemented no penalties for late filing. So as a result, there's no need to submit. There are no penalties. In the UK, we've seen extensions on the PLCs from 6 to 9 months, and on the private companies, the limiters and LLPs, we've seen an extension from 9 to 12 months. So it's a temporary measure, but businesses can apply for any further deadlines to be extended after the 6th of April. This means that the data that we're getting is out of date. In some cases, this data is only relevant to 2019 or is Q1 2020 at best. These are accounts that are all pre-coronavirus. We're also looking now at the data that's slowly going to come through that is trading during coronavirus, but effectively it's not until the year after next that we'll start to see how businesses have been able to get out of coronavirus when they start publishing their data for 2021. So with that, next slide, please, Dan. So with that, we've also got misleading information. We've seen quite a lot of state aid that has been pumped into businesses. Billions have been pumped into the businesses. And a lot of businesses are not trading. So artificially, they're increasing their current account balances. They're holding on to cash surpluses. All that showing a reduced cash burn in some instances. So payment holidays, additional support, all of that is showing that the liquidity is increased. But actually they're not trading, so the outgoings are not showing there as well. So the information that we're getting is distorted. That's the next slide, please. We've also looked at some of the regional sector risks assessments, and we can see here some movements in automotive, which is improving. This is as a result of big ticket purchases by individuals, cars being purchased again, travel has been relaxed again for people to go out and about. We've also seen within sector, we've seen movements here in beverages, for example. We've seen a risk movement from hospitality to supermarkets, effectively from pub to Asda, as the public is now buying to drink at home. And then the next slide, please. And then finally, it's for us, what are we doing to combat this lack of data? I refer to slide 2 to the moratorium, restructuring, prohibition of termination, wrongful trading, and all of that. So from a debt collection point of view, we've not seen that big an issue as what we did expect at the time, and it just hasn't happened. The actual experience has been minimal. It's the data that has been the bigger issue for us. It's to judge the probability of default. So as a result, we've had to increase our activities, one-on-one buyer interviews. Our tasks have massively increased, but it's predominantly buyer interviews. We've introduced the coronavirus questionnaire, which is still being continued now in 2021, looking at how businesses are trading out of coronavirus, how are they looking at the supply chain. One of the exercises that will be a good example is Greensill. We looked at what is the impact of Greensill, where does that sit in our industry? Where are the surprises going to come through? So we've done quite a lot of searches. We use technologies like optical character recognitions through the company's house books. We have an India team where we look for web browsers and we look through various articles on a day-to-day basis. So all of this is increasing our activities and is looking to add more and more of our data. Data that at the end of the day also enriches this for the benefit of our clients, because this data is also available. With that, I'd like to hand over to Francois, who's Global Head of Structuring at Demica and a partner together with Coface. Thank you.
Thank you so much, Hans. You mentioned that are quite critical at this time of the year and its environment, and it is indeed where Demica, let's say, provides support. Just a brief information on Demica. Sorry. Okay, so because we unfortunately are not as well known as Coface, so just in a few words, Demica is a 25-year-old company that has been acting in reporting and information to the receivable and supply chain finance industry. We work with banks and corporates and with funders and non-bank funders. We currently have on our platform more than 18 billion of assets, and we process every day 6.5 million of receivables. So as you can imagine, we have a lot of information, and we receive this information on a daily basis for more than 1,000 companies. So I'm going to show you, let's say, some information from our platform that represent a flow of 88 billion of euros that are spread across a large number of sectors, and they represent around 1 million of invoices per month. More than 80% of the sample is based in Europe across all these sectors, so it will be a good benchmark of the European activity, but we can think about, let's say, what's the impact also in other jurisdictions too. So what we have done is that we've rebased, let's say, the sales on the basis of January 2020 index. So let's start with, let's say, the great winner of let's say the current environment. I mean, IT is very seasonal, as we know, with strong trend, and there's been, as we all know, growing demand in home working with sustained need. I mean, you can see that this trend is very strong. It's continuing, and we saw recently some announcement by some market players, such as Computer Center, mentioned that, let's say, their performance had been largely above expectations, which is not so common these days. The question we could have is whether the current chip shortage could have an impact on this success story. As we can see on the right, and you'll see that on all the various slides, we have indicators that tell us about the aging, and we looked at the aging over 30 days. So here at 4.8%, that's slightly increased, but it's still quite reasonable. And you will see also on the right-hand side of each slide information about the days, the terms of payments, the days of payments as per invoice, and the actual collection terms with the trend that we could see. Among the resilient sectors, you have the food, obviously the food sector. I mean, obviously the hospitality sector has had its own issues, but food itself has been quite strong. You can see very, very low level of overdues. It's fast turning and very stable performance. Another very strong sector that has, for other reasons, that has maintained its activity has been the paper and packaging. I should rather say the packaging sector, because you would expect the paper sector itself has suffered more. It's obviously largely driven by internet sales, and let's say it's also driven by food packaging itself within that, and you can see an increase. Again, let's say relatively good performance on the aging front and relatively fast turning receivables. So decent stories. The transportation sector, let's say, has had quite an impact. This one is very important because, as we all know, transportation is a good indicator of the economy. You can see the traditional W shape of the year 2020, but you also see it's quite sluggish for the start of this year in terms of activity. Why discrepancy in these sectors? Between the logistics segment that has fared quite well and the transportation sector that has, let's say, suffered, in particular in relationship with, let's say, the industry orders. We've seen in this sector a certain level of delays, but that have generally been resolved. So you can see these three sectors have all in common. That's basically they seem to be quite heavily correlated with this performance, W-shaped. Low aging, shorter payment terms, and generally faster collection times. Now, the story is really different in the industry. As you can see here, we have, let's say, the primary metal sector. Well, this is a sector that has heavily suffered. In particular, let's say the activity only restarted once the inventory were absorbed. But let's say there are very positive signs early this year of a stronger recovery. We know that in particular the prices of metals are quite strong, and the order book seems to be relatively strong. So this is something to watch. As you can see on the right, the balances of overdues have tend to be quite heavy. I mean, it's double the size, the amounts, and with wide discrepancies. And for these businesses that have heavy fixed costs, that has been a challenge. We have a fairly, let's say, similar story of peaks and troughs in the fabricated metals. Here, I would say that there is indeed also quite a high level of agings and wide discrepancy. I mean, it's very symbolic of a two-speed economy, and you can see the trend of early this year is bad, but there may be, let's say, good news in the offing. I mean, we've seen that the purchasers index in Germany has reached a 3-year high in March. But it takes time to translate into receivables. Chemicals also have been rather sluggish, despite an increase of the oil price, which, let's say, materialized at the start of this year. So this is, let's say, for those three sectors. And finally, we have the automotive sector, which, as we all know, it's been well publicized, has had, let's say, its own difficulties. Well, I mean, we know that factories have shut down. We have, let's say, a significant sample of suppliers in Germany, in France, and in Italy. And you can see we have two types of curves here. You have, let's say, the tier 1 automotive suppliers, but also the tire makers, with very similar trends. So let's say, agings have increased, but remain quite generally quite controlled, and payment terms remain quite tight. There are strong headwinds. I mean, we'll see how the shortage of chips will also have an impact here. So on this note, I will hand over to Andrew.
Good morning, everyone, and welcome to the webinar. So I'm going to talk about fraud, a little bit of observation of what Coface sees and is observing at the moment. So without further ado, I will move to my first slide. First slide, please. Okay, so fraud risk. So obviously fraud is extremely prevalent everywhere, not just in UK, but it's worldwide. It's usually typically very well organized as well. So don't consider that fraudsters don't have deep pockets, because a lot of them do. And usually it sort of is tied somewhere along the chain to organized crime. And whilst there are various agencies in all countries that do network together and in some degree efficiently, it's still the fraudsters are usually 1 to 2 steps ahead, and particularly, you know, they will invest quite a lot of money into IT infrastructure, into buying legitimate businesses, and so we'll go through a little bit of that in the following slides. But even with the National Crime Agency and other organisations that try to subvert and disrupt fraud, like I say, they're always usually 1 step ahead. So what's the cost? Well, in the UK, it's estimated currently at about 190 billion to us. 3 million of incidents reported each year. So, you know, that's probably scratching the surface. Essentially, is what is believed. In the private sector, around about 140 billion. The public sector may be losing something like 40 billion, but ultimately the public sector is stood to potentially lose even more, as Hans mentioned, with the various moratoriums in place. Has it opened conditions for fraudsters to be a little bit more prevalent, active, preying on the circumstances? Yes, it has, because fraud exponentially is increasing. I'm just showing you some statistics here from Action Fraud, where the number of reports, continues. The reported losses, 2.5 billion. But in particular, when we look at just Q1, you'll see a small diagram down there to the bottom right, where there is a peak, particularly for 2021. So ultimately, the investigations are pretty much on a higher trajectory. And talking to some colleagues in various organisations over the past weeks, they are inundated. So particularly, you will see that the conditions that we have at the moment are ripe for fraudsters, unfortunately. So creating more opportunities. And that's particularly with the COVID pandemic. People working from home has created gaps in process and gaps in efficiency, and I'll take you through a little bit more of that shortly. Also, types of fraud coming in, new methods. Deep fake is, you may have seen that. There's quite a bit of information on YouTube and various other platforms where you can see deep fake, which can be by video, but more prevalent via phone. So they can actually sort of take people doing webinars, recording the voices and even the people, and reanimating. And using that in voice calls to pretend to be someone. So identity fraud is prevalent too. Next slide. So yes, COVID-19 has brought greater exposure to fraud. Things to be wary of: business owners and employers were under greater financial pressure, of course. Many staff being furloughed as well. So does that create opportunities where people are that are working are overloaded, because they might be doing 1 or 2 people's jobs at the same time in some of the smaller businesses? Operational efficiency drivers, and so are some companies cutting corners? Does that create an environment for fraudsters? Desperation of people, so commonly collusion and preying on vulnerable individuals within businesses who financially need support. Fraudsters look for any kind of opportunity. And desperation particularly can lead to collusion and fraud. Next slide, please. So just taking you through some common scenarios. There are many, but I just thought I would take just a few, but particularly. So this scenario: fraudsters set up a company to take over a legitimate business with the intention of defrauding creditors. So the buyer wants to obtain a legitimate gain, obviously. buyer orders goods to a supplier with no intention to pay, and then runs away. I mean, that is probably one of the most common that we have, and the creditor unfortunately has to write it off. And Coface, as a credit insurer, if we provided a limit, if everything was done correctly and know your customer, etc., then an insurer may pay in that scenario. Next slide, please. So collusion, again, a pretty common type of fraud as well that we are observing. So what we've seen particularly is we've had policyholders outside of the UK that they're insured with us, buyers in the UK, colluding together in respect to trade one-to-one, ordering many goods and to usually typically high values, and ultimately defrauding not just our client but also Coface as well. So ultimately, this particularly is prevalent, but ultimately the way Coface is set up, we are in a unique position in monitoring of all of this information to prevent a lot of this fraud, and hence we do have and keep a monitor of many of these. Next slide, please. So identity theft, this is the most common, and actually we probably see 70% of the frauds are identity theft. And again, particularly fraudsters will set up associate very similar websites. They will look and feel the same, just some minute differences there, slightly different. Emails are set up to subvert and ultimately pretty much take over the identity of a company, and that can be letterheading and very, very sophisticated. So diligence is key, and particularly this type of theft is the most common that Coface is observing at the moment. Next slide, please. Now, these are some things to look out for, but just picking out, fraud in general and particular sectors that are vulnerable. Well, particularly it's FMCG as the most prevalent. And Francois, you were talking about IT, particularly those sectors, retail and particularly food. So food distribution, food wholesale, anything where there is particular high demand from the consumer or whether within business, that is where fraudsters will prey, because the potential rewards for them are greater. So here are just some points that you can look out for. So companies that sort of create a web of companies as part of a group, and you ask why, what are the relationships, convoluted structures, purchasing distressed businesses to make their operation legitimate. People, usually it's people who are larger than life characters that generally will drive, very large sophisticated frauds. Next slide, please. And here are some takeaways. So when you look back onto the recording, please have a look at these because these are very good pointers to, spot fraud. As I say, Coface is sophisticated in how, we monitor all of the debtors on behalf of our clients. We can see it from a global position as well. So again, very unique. And because of that, and because of the wealth of our database, we're able to prevent a lot, but not 100%, unfortunately. So vigilance by yourselves and clients is key. Next slide, please. So ultimately, in partnering with Demica, how can we help sellers, with sellers disappearing suddenly? As I said, we sit on a wealth of information. We're monitoring 2.8 million companies at any one time. Why 2.8 million? Well, it happens to be the most credit active of companies globally. And so Coface invests a lot of time and money into doing that. And leveraging from that unique platform of information, we also have our very large debt collection operation, which has a very large global footprint, probably one of the largest that no one has ever heard of, but ultimately it's built for our business. It's a critical fundamental part of credit insurance. So with that, we've partnered with Demica, leveraging from what Coface does in being able to put some solutions together, particularly where we can set up securitization programs, ultimately doing backup servicing, and from that, stepping through to negotiation, testing, setup, through to the standby phase of backup servicing, where we're monitoring the portfolio, again leveraging from the information that we have, and being able to keep and report on that readily. Then through the backup servicing, we can move to potentially the activation phase, which obviously happens when a receivables client defaults, and ultimately we go into step in to collect out of that in the next stage. And we have all of the advantages of a full platform ready to go and to facilitate all of that cash collection through to ultimately recovering monies. And again, not just domestically, this works operationally globally in order to give the security and peace of mind at the end of the day in respect to the recoveries ultimately. And that concludes a very brief overview of fraud, and particularly in respect to our partnership with Demica, and we'll move to questions and answers.
Thank you very much, Andrew. Thank you, Francois and Hans. You can, as indicated earlier, you can send questions through the chat panel. So please do so, and I will distribute them. Maybe starting with one point which both Francois and Hans have alluded to, which is the current shortage of supplies in a number of industries. You've mentioned the microchips industries, but there are shortages across Europe, even in concrete, timber, a number of sectors. So maybe Hans, you can start with that. Do you see already an impact on companies, and how can you monitor these types of situations?
The monitoring is quite tough. This is basically part of our questionnaires, particularly with our larger exposures. This is where we incorporate these questions around supply chain, coping mechanisms, etc. On how do these businesses adapt to new circumstances. A good example is recently with Tesco's, a big loss reported due to a switching of their coping mechanism with online demand increase. That's the sort of information that we would seek upfront and assess with the buyers whilst we do this. You mentioned the shortage in wood chips. This is an impact that's going to have, and this is a future impact as such. You've got a reduction in construction industry as such. There's a lack of materials. There's a lack of construction materials from which to make these wood chips. So these are impacts that are taking place now, and that will have an impact in the future. We also look at impacts, for example, in business failures that are happening now. Are any of these business failures impacting buyers that are insured with our policyholders? So the gathering of data is quite widespread that we do as a team.
Okay, thank you, Hans. Francois, we've seen that the US economy came with a relatively strong momentum into 2021, and now it's accelerating thanks to all the fuel which is added. The Chinese economy seems to be recovering, and are you able to start to see some premises or the early signs of a pickup in the numbers? Or if you don't see it yet, when would you expect that to show up in your numbers?
Thanks, Frederick. As a matter of fact, indeed, during last year, we've seen, let's say, the same pattern happening in Europe, happening in the US, but with a typical lag of 6 weeks to 2 months. However, more recently, it's been a bit the reverse. The US economy has been at least in our numbers, and we have around 20 billion of flows during this period to assess that, has been let's say picking up much faster, with very different behaviors across sector. So it's mixed. A mixed message here, but at least one which should bring some sort of hope, because as we know, when the US economy starts again, I mean, the rest, and in particular Europe, tends to follow.
Okay. Thank you, Francois. Are you able to track also one aspect which Hans mentioned, which is about risk concentration? So typically in the drinks industry, the suppliers and financial institutions financing them would have a spread of risk across the hospitality sector and the supermarkets. And now everything has shifted, but a lot of it has shifted to supermarkets. Do you see the same type of patterns already in your numbers?
Yes, I mean, we have the capacity. It was not possible to show that on these slides, but we have the capacity to track our concentrations per sectors, concentrations per companies and groups, and indeed we see interesting patterns happening. The food sector is one of them, but let's say as you would expect, also the tech industry is a really interesting one at the moment.
Okay, thank you. Daniel, I think there are some questions already which have been sent. Would you mind raising them to our panelists?
Sure, thanks, Frederic. So just one that's come in, a hot topic, I suppose, for the industry at the moment. How has the Greensill administration impacted the business and the market more broadly?
I take it that's going to be one for me then. Greensill has been of great interest to us. It's been a tough one to try and analyze and establish. I mentioned earlier we've trawled through Company House to look at where does Greensill sit within the company finances. How will it impact out there? It's still early days. At the moment, we're assessing policyholders, we're assessing buyers. We've looked at Credit Suisse to try and establish where are the losses being incurred. We're monitoring one or two companies in particular very closely that are in the news. How will it impact? At this point in time, there are a couple of other venture capitalists circling around to see if they can step in. I think this ultimately will impact the immediate supply chain, the immediate financing. This is invoice finance, so ready cash. So those companies that are reliant on the cash from Greensill now suddenly are not able to draw on that money. Liberty Steel is one of those businesses that have been heavily reliant on the invoice finance, invoices raised, invoices sold. Now suddenly that's not going to happen. So it will have a big impact out there on those businesses that rely on Greensill for their cash flow.
All right. Yeah, go ahead, please, Francois.
Just one point on that. Yes, I mean there is an impact for those companies that are, let's say, directly affected. Well, but this is a finite list of companies. There is also, let's say, more generally, the perception of receivable and supply chain finance products across the industry. What we can see here and what we read in the press is that, however, let's say, a number of issues that seem to have come up seem to be linked with very specific patterns of specific products that had been offered that are definitely not representative of the industry whatsoever, and therefore let's say there is two things to take into account. There is probably a call to actions in terms of transparency. That's likely going to come to make sure that let's say all parties really understand what they are doing and which type of assets they invest in. Maybe also some impact on the accounting treatment of certain transactions, especially on the payable side. But more generally speaking, I think it is, we believe, something which is definitely not representative of the industry at large, and therefore will be remembered as a one-off.
Yeah, thank you. We've got another question coming from the audience about businesses and consumers getting addicted to government support generally. Who wants to pick this up? Hans, possibly?
Yeah, we've seen an extraordinary amount of support being pumped into the economy. Not sure if it's addicted to. There are some of the businesses out there have resurrected businesses for the purpose of extracting these loans. Andrew mentioned that. It's part of the fraud issues that we're looking at as well. Addicted to it, I think it's not the right word. I would say it's desperation out there. Everybody out there is desperate to stay alive, and having your business shut, and as such having no income but still your outgoings. At the moment, the government has done quite a lot of, there's taken a lot of measures, furlough schemes, trying to help businesses to survive this current situation. It's now watching how these businesses are going to come out of this. And like I said, at the moment, the trading records that we're looking at is 2019, beginning of 2020. We're now going to start to see filings being done at Companies House for 2020 accounts. They're going to be interesting, but what are they going to show? It will show potentially a big increase in cash, but it will also see a big increase in loans. But then the more important one for us is next year. How are these businesses going to trade out of this? How are they going to come out of this pandemic? Doors are opening. Will we see a big spike as we've seen? Everybody rushing to the pubs, everybody rushing to the shops. Will that continue, or will this be a spike, and will we then settle back down to what could be a new norm? We don't know at this point in time, but I think that the businesses that have borrowed the money have done so out of desperation to survive.
Yeah, thank you, Hans. Another question is linked to high concentration of risks from a single obligor, and the way we can handle that effectively. So how do you manage these very high risk concentrations?
Beg your pardon, that's for me. Rookie error, leaving the mute on. High risk concentrations, that is again being assessed by our analysts, is to look and see where are these, what's the reason for these high concentrations first of all, but then it's looking at how does that impact the businesses.
From a transaction point of view, we monitor concentrations, because I think on the audience we have a lot of financiers, funders, factoring houses, and securitization parties. I mean, we work with all sorts of type of financing, receivable financing products. I mean, from securitization to factoring to invoice discounting and so on and so forth. I mean, really, the gist here is to have, let's say, adequate and valid information to be able to identify, let's say, the golden rule is to identify the counterparty, and also to identify the group of that counterparty. Once you have, let's say, secure information, I mean, there are let's say, tools and modern technology that allows to monitor that in a very, very detailed and manner, and on a daily basis. So my advice is that not to rely on monthly reports coming from the companies themselves, but to have daily flow of information that is checked.
Yes, thank you. And if I may add, there are several different types of concentrations. There's the one which is the Amazon type of concentration, where you know this is a company which is growing, but which is generating masses of cash due to its growth. So that's one type where probably we are comfortable generally. There are some limits, of course, but generally we are very comfortable with that. Then there is the Tesco type of concentration, although Tesco is probably not an issue currently, but where you've seen in the results released a couple of days ago that they are growing, but not their bottom line. So we've got really a lot more exposure currently on the likes of Tesco's and Sainsbury's, Asda's, and supermarkets more generally. The question mark is whether their finances are following the same trend as their revenues. So that's another one. And there are some sectors where concentrations are increasing as well, but there you have a doubt about the viability of a business, or at least at a certain level of exposure, and that's trickier. And this is the case, for instance, in the metals and steel industry, where we've got a lot of requests coming in currently just because of steel prices going up, and we cannot necessarily satisfy all of them at the same time because we want to make sure that our position is sustainable. So that's that. There was a question also about backup servicing. Actually, it's larger than that. It's about processes to have automatic limits in our systems in cooperation with Demica to secure receivables, and whether it was part of our backup servicing service. So I will let the experts answer, but there are again two types of situation. There is the backup servicing offer on a standalone basis, and there is backup servicing when we are also a credit insurer, and of course then there's more interaction between Coface and Demica and more links. But maybe Hans or François, you want to add a few words about that?
Maybe I'll say a couple of words, and then I'll hand over to Hans, because logically what happens is that it starts with the flow of information, where we are integrated with the originators' ERP systems and receive on a daily basis this information, which means that we are in a good position basically to know not only the performance but also, let's say, the operational situation of the originator, which means that we ensure a seamless transition with the backup servicer with whom we are also integrated, with Coface, and who is in a position to, let's say, to switch the information. We know that the information continues to come from both sides, but we are in a position to integrate that. And then that's the Coface collection teams of Hans who take over.
Yeah, from this flow, for example, is we allocate these to what we call easy numbers. So all of our debtors, buyers that we have in our system are allocated a simplified easy number. This easy number is a unique reference around the world. And with that, we can score these and we feed this information back to Demica to give them a portfolio risk overview. This is actually also done at country level. This can be done at creditor level and at country level, so we can slice and dice this many ways over. That with the easy number, it actually also means that, and going back to the original question, which is the credit limits, yes, we can then also set credit limits. We have two particular products. We have the debtor rating analysis, which is the probability of default, and that's the one that is currently most commonly used for the Demica program. But we also use the CCO, which is customized credit opinion, and here we can apply a credit limit, a trading credit limit, to the buyers, and we can feed that also back into the backup services. So we can see whether a business is over trading or whether there's capacity for trading as well for the Demica and their clients. At the same token, again, we can slice and dice this in countries, and we can assess the risks. So this is an information flow that with backup services on a monthly basis, for example, we feed back every month the portfolio overview of our opinion and our DRA at that level, and that can be done for any portfolio. It's all down to identifying the buyers, and then, like Andrew mentioned, 2.8 million records around the world. Just for the UK, it grows on a regular basis every time we provide a new DRA or a CCO, a new easy number is added to our records if we don't already know that business. And from there on, it naturally flows like any sort of information agency would do as under the normal trading circumstances.
And as on top of that, it's our unique position in Coface, whereby because we're global, we're able to see the vision and the interest in those buyers and obligors particularly. So we will have several interested parties on that buyer, and that's a uniqueness of the web of trade that Coface monitors, and really gives that upfront real-time view.
And maybe one additional last comment on that is that there is a wealth of information in data, which is sitting and is generally not used. So let's not wait until one sees issues and significant issues with let's say the parties and the sellers in transactions. This type of monitoring can be put in place, and it would be good practice to put it in place before the issues come, which would let's say avoid having to set up in a rush, let's say recovery procedures, which at the end will not have the best effect for the funders.
All right, thank you very much, and thanks to the audience for sending these questions. We are overrunning a bit here, so I really want to thank again Francois, Andrew, and Hans for their insights into recent trends in risk analysis and how we can handle that. And with this, I hand over back to Daniel for the last words.
Thank you, Frederic. Thank you to our expert speakers, and thank you everyone for attending today's webinar, New Challenges in Debtor and Obligor Risk Assessment. At the end of today's webinar, you'll receive a survey on the presentation. We would really appreciate it if you could complete that and provide your feedback. You will also receive a follow-up email within 24 to 48 hours with a link to view a recording of today's webinar. On behalf of Demica and Coface, thank you for joining us today, and have a great rest of your day.
Thank you.